Well, good afternoon, everyone, and welcome back to Myrtle Beach Living. I'm your host, Todd Cartner, and today we'll be talking with Ryan Leonard with U.S. Mortgage Corporation, and Ryan and I have done a lot of business together, and he's awesome to work with, so welcome, Ryan.
Glad to be here.
Yes, sir. And here at Myrtle Beach Living, we talk about entertainment, we talk about dining, we introduce local businesses, and, of course, my favorite, real estate. And so if you're interested in joining our show, then all you have to do is to email me here. If we'll put that up on the screen at todd@toddcartner.com, and you can get in touch with us at any time. So, Ryan, I appreciate you joining us today. And so what I want to talk about is a couple things. I know this virus has been crazy with everybody. So with this COVID-19 virus going around, where do we stand with the current interest rates?
A good question. They've really been steady here over the last several weeks plus. Obviously, back in March, when everything started, we saw really the lowest rates that we've ever seen over like a 3 or 4 day window, roughly somewhere in there. And then for about 2 weeks or so, they shot up almost 2%, just shy of it, about 1.75% over a 2 week period of time or so. Largely, I think, was just to slow down the applications and the volume of apps that was coming into the banks and lenders nationwide, just so they could get a handle on everything. But for the most part, since then, rates have leveled back off, and we're sitting, still somewhere in the low mid threes, somewhere around 3.375, give or take, just depending on the day, and on a 30-year fixed rate mortgage. And the 15 years have been running mid to upper twos, somewhere around 2.75%. Again, give or take an eighth of a percent or so, pushing towards that 3% range on the 15 years. So all in all, rates have been pretty steady. We're hearing a lot of different things out there. Obviously, as the bank and lender world and loan officers, we find out when the customers do. There's no inside information of what happens out there with rates at any given moment. But everything that we're hearing right now is that Freddie is predicting towards the end of this year, Fannie Mae is predicting sometime going into 2021 that we're going to see another rate drop. But it's speculation. We'll see what happens. Technically, where everything is out there in the market, we should be having rates right now in the 30 years should be in the mid to upper 2% range. And 15 years, we should be seeing closer to, lower twos, even maybe possibly upper ones. But just because of the volatility and the inconsistency out there, with rates and the market and the economy and everything, nothing is coinciding right now with where they should be on a traditional day or basis. With that said, it's hard to say what happens. Nobody knows what's going to happen with rates. They're predicting they could drop. They could end up staying the same here for the next year or so. And everything else then catches up with where the rates are rather than the rates leveling off to where they should be. So, it's a tough market out there right now when it comes to rates. No one really knows what to do with them out there as far as the banking industry goes. But overall, they've been hovering, right around the same percents, low threes, for several weeks now. Obviously, you're going to have your good days and bad days, no different than stock market, the economy, good weeks, bad weeks. With rates, but I don't foresee them making any major jumps out there right now with the state of the economy.
That brings up a good question right there. Since the rates are so low, have you started seeing more 15-year mortgages as opposed to 30?
A lot, yeah. And
you save a ton of interest if you do it that way, obviously.
A ton, and you're getting out of you're getting your principal paid down quicker. Even if you keep it for 5 years on a 30-year, when you get 5 years in at 25 years, you still haven't really nailed down your principal a lot. But on a 15-year mortgage, same mindset, 5 years in, you're a third of the way through that mortgage already. So, if you can afford a 15-year mortgage, that's your best route to go as far as your overall picture with paying down equity in your property, decreasing interest paid, all that. But obviously, you've got to be able to comfortably afford that payment. But yes, sure. We are definitely seeing a lot of people going into these 15-year terms, 20-year terms, shortening their terms out there.
Right. Well, I know everybody is wanting to know this answer to this question, but what changes have you seen since this COVID-19 started?
Well, a lot of it outside of obviously the interest rates was really the loan programs out there. initially the government loans got hit the hardest out there initially. So we saw a lot of major changes going on with the government loans. Credit scores went from, for the most part, people would go down to around a 580. And they shot up to as high as, 660, 680 with some places. Some people hovered around 600. But that was a big thing. Debt to income ratios tightened up also with the government loans. So we saw it harder to get loans out there with debt to income ratios over 50%. And you really needed credit scores in the 640, 660 range or higher for things to play through. But since then, we've started seeing some stuff come back down. Things are starting to settle down out there again. But that was the major impact that we really saw out there was that. Obviously, some of the stuff that we had to do for underwriting purposes, as far as verifications of employment and whatnot. Also, that was a change that was made because people were getting put on furlough and laid off and losing their jobs daily. So literally one morning you could be good, that afternoon you could have found out that you've lost your job. So that was another thing that we had to go out there and start doing is, verifications of employment right up until closing, just to make sure literally up until the closing that they were still employed. But for the most part, it was, that credit scores tightened up, loan programs went away. A lot of your brokered loan programs out there for unwarrantable condos, condotels, your bank statement programs, a lot of those went away. We're starting to see a few of those come back now, but that was really the major things that we saw out there due to the change with the virus.
It really affected those that were looking to purchase second homes as well. I noticed that myself.
Yeah, across the board, really.
Yeah. Well, I have been very busy the last few weeks, so I'm sure you have as well. I spoke to a home inspector this morning, and he said he's been the busiest that he's ever been. So, with that being said, how do you feel that the current market's going to be going now that things have started lightening up a little bit?
To be honest with you, I personally really didn't feel a slowdown. I mean, when this whole thing happened back around March or so, I was prepared personally that, I could be seeing one loan a month. I was, worst case scenario, I thought that we were going to be out there digging, for business. I thought it was really going to fall off, and it didn't. Oddly enough, the purchase market stayed pretty steady for me that I saw out there. Obviously, the refi market picked up, but my purchase business is as strong as it's ever been. So from that standpoint, I really haven't seen a big layoff. I think that we'll continue to see this same environment going forward for a while. And evidently, it didn't slow down a lot of people from buying. The ones that I did see slow down were just basically because of travel. They didn't want to buy, sight unseen,
Right.
But people were still buying with virtual tours. So it was what was going on was just, it was such an odd moment out there for our industry to see us work through that. It really didn't slow a lot of people down, but people were still ready to buy. And as soon as they opened up the doors, as far as so people could come in and get hotels or short-term stays, so they could, go view these properties, people were buying like immediately. So they were ready to go. They came down, saw their places, offers were going in. So, I really didn't see a huge slowdown out there. I predict obviously it's going to continue to do what it's doing, if not better. People are going back to work. The economy still feels, like it's strong out there as far as people's buying power and whatnot goes for the real estate industry. So from what I'm seeing is that it's going to stay steady, if not keep improving as people are going back to work now.
Right. The Coastal Carolina Association of Realtors has issued information that said that showings were way down. I've even heard a number of 40% go off. But what I've seen as a realtor is that the 40% that's slowed down are those tire kickers out there that weren't ready to buy anyway. And something that, you and I have discussed this, and I've heard a lot of people say this, is that during this virus time, we knew that once it was over, that people were going to be sitting in their home for 3 months, and they would say, okay, this house is too small, I need something larger, or the house is too large, I need something smaller. But one of the things that we really didn't take into consideration was that the people that live up northeast that move here so much, and even somewhat to the Midwest, is that they were saying, if I'm going to be stuck in my home for 3 months, I would rather my home be a second home in Myrtle Beach. And I haven't slowed down at all. I've been the busiest I've ever been in the last 2 weeks. And a lot of that too is that I've seen that people that had tried for a mortgage and had already spoken with a lender, gotten pre-approved and things like that in February and March and even April a little bit. Now everything, all their ducks are there. So it's just now, like you said, kind of just making sure everything's re-verified and boom, you're ready to go. And I'm even seeing closings in 3 weeks right at the moment, which is not normal. You know, it's normally at least 30 days.
Right. No, yeah, you're exactly right.
So you're seeing that those that you had put on hold as well are now being able to be pushed through relatively quick. Now it's just a matter of re-verifying everything, right?
That's exactly right. Just making sure, obviously, their situation hadn't changed for the worse, or if it had, that it didn't put them out of qualifying guidelines, and that their employment is back and that their life was comfortable. I mean, I had a lot of people that were on fixed incomes or didn't lose their jobs, and people were buying. I had equally amount of people that just got hesitant because of the market. So a lot of the people out there that weren't buying, they got nervous, I think, because of the economy and everything that was going on. So they, backed out for those reasons solely, not because of income or assets. Just they got partway through the process and just felt uneasy because of where the economy was at and then backed out. But yes, I mean, to that point, I've got a lot of people that were lined up, ready to go. They were very proactive, obviously got pre-qualified, had everything ready, just so when that opportunity came for them to either find a place that they wanted or come down and, physically start looking in person, that they were ready. And, the ones that got affected by employment, same thing. We just had to wait for them to get back to work, get, their income stabilized and back, and us to be able to verify it. And then that's it. Yeah, they're rocking and rolling again.
And you brought up an interesting point about the economy. Before all this started, we were very strong in the economy, with unemployment rate being way down. Salaries were going up. So it was really strong. I do think with this hiccup that we've had, that once things really start to pick back up, that the economy may even be stronger than it was before the virus.
I agree. And a lot of that goes kind of tying to what we were just talking into before. Like when this all happened, man, I mean, who would have predicted that things would stay the same, if not improved, out there for the people who could buy? And
right.
This whole process, nothing has made sense, to be honest. I mean, the stock market is doing as well as it's doing in the crisis that we're in. I mean, with unemployment, with just everything related to COVID, nothing makes sense out there right now, to be honest. And where, where things should be based off of the stock market or the economy or the treasuries or mortgage-backed securities, and nothing is aligning with one or the other. You see this, you usually see this. Right now, it's kind of like the Wild West. Everything's kind of doing its own thing that's not correlated to the other right now. So,
right.
It is pretty, mind-boggling and astonishing both that, the economy's really, it's almost like it went on pause and then it got paused and got released again. I haven't really felt a major step backwards.
I actually had a client to tell me yesterday, as a matter of fact, that their employer has given them a $2 an hour raise and is allowing them to work at home. Because they've been working at home for the last 3 months or so, and they found that they could be more efficient working at home. And so the employer saves the money on, they had a small office and there were 10 people. They're allowing all 10 of them to work from home. So now they've gotten out of the lease where their business was, and they're saving money. And so that was pretty neat too. So, hey guys, stay with us. We're going to take a couple, a pause for a couple messages from one of our sponsors, which is U.S. Mortgage Corporation, and then a little message from me, and we'll be right back. Every client is unique.
Every client is unique and has different needs. Whether it's a growing family, a first-time buyer, an investor, or someone looking to downsize, I am here to help guide them through the process. My name is Todd Cartner. I am a realtor with Exit Coast Real Estate Pros. I serve Myrtle Beach and the surrounding area, and there is no place I would rather have my family call home. You need a realtor you can trust and will put your needs first. I want to become your lifetime realtor. If you are looking to buy or sell real estate, please give me a call. I look forward to speaking with you soon.
May have had a little hiccup there on that commercial. I don't know. Got a little bit of live internet, but that's okay. At least they played.
That's right.
So gotta love it live. So where do we stand right now on Freddie Mac and Fannie Mae on some of these loans? And I know that some of the specialty loans, especially the government programs, were put on hold, and those that weren't, as we discussed before the little break, that there were some restrictions put on, or they raised the restrictions. So where do we stand right now on those government loans?
Yeah, well, Fannie and Freddie have really been steady the whole way through. I mean, obviously they were making some adjustments out there with credit, and underwriting guidelines just because of COVID and what was going on with the employment and the job force out there. But for the most part, they've been really steady. They did have just recently here within the last week or so, they came out with some new guidelines that will take effect here, I believe this coming week or beginning of next, with live applications going forward. But more specifically to self-employment income and verification for income from the self-employed borrowers. And that's just obviously because of the businesses on a day-to-day right now survival mode out there for many of them. We have to do a little bit more underwriting documentation and checks and verifications as far as their current status. As far we need current profit and loss statements, stuff like that. We can no longer just fall back to the last quarter. They need it pretty much current through the month and stuff like that. Further documentation of supporting that income and that the business is still viable out there. Yeah. Other than that, Fannie and Freddie have really been, pretty steady out there right now. And for the longest time, I mean, they were reversed. I mean, they had better rates than the government stuff. Most people were pushing, through conventional with Fannie and Freddie at that point. But all in all, things are really good with them. They've been pretty steady. It's just them, navigating through this process right now with how to make sure that we can still handle borrowers coming back into the workforce and what's going on with it.
Sure. So what about any other programs? I know that there were a lot of push before this virus took place of loans that were specifically for firefighters, police officers, nurses, and even some other organizations that were out there. I know that I'd even seen one come across that if you worked in the medical field, even in the dentistry office, that you would be able to qualify for some. So where do we stand on those specialty type mortgages, I guess is how I would phrase them.
That's a great question. Most of them are still gone. Right now, we still haven't seen them. Now we're starting to see some of these, brokered products, so we call them, are starting to work their way back into the market. We're seeing some of the bank statement programs come back around and start to be available for people to use. But, for the total picture of it right now, most of them are still on hold. We did see SE Housing has now opened back up their product line, which is good. That kind of falls in line with the one you were talking about. They have the down payment assistance program out there. Now they have made some additions for 2020 this year. They have added, so that's the one that they have the Heroes program out there. Mm-hmm. And, right. For firefighters, police officers, nurses, etc. But now they have also opened up the category this year for 2020 to include, so it's going to be teachers, emergency medical service personnel, your licensed medical professionals, such as your nurses and whatnot that you were talking about. They've also now added grocery store employees this year, I think a lot because of COVID and what's going on. Sure. So they've opened the door for them to see a part of this HERO program. Delivery package drivers, so like UPS, FedEx, U.S. Postal probably for them as well. We'll have to, dig through these guidelines a little bit with SE Housing to see specifically who that relates to, but they've opened it up for delivery drivers. The law enforcement officers, correctional officers, veterans, and also South Carolina National Guard this year. So all those that I just mentioned there are now part of that big Heroes group. And so that's nice. It's about it's a $10,000 forgivable down payment program, so you can get up to $10,000 for down payment assistance. It is forgivable depending on income, either on a 10-year forgivable note or a 20-year forgivable note. And it is a fixed rate program currently at 3.5%. So their rate is something that they set. It's not up to the bank or lender.
Right.
And but currently that's how that program works. And then they've also got some other programs out there for first-time home buyers and also people who are move-up borrowers. So they're looking to grow their families, get bigger houses, so on and so forth. And that is also very similar to the Heroes program, but again, you don't have to be a first-time home buyer for that. And that one has up to, there's a 0%, I think a 3%, 4%, and 5% down payment assistance programs out there for that. So up to 5% as a forgivable down payment program assistance for those people that were in the non-hero category.
Well, that's awesome. I think that that's a great way to give back to those people that basically couldn't stop work during that time. So
that's right.
Awesome. That's good to know.
They put themselves out there in harm's way, so to speak, just like the nurses and the paramedics and the firefighters and the police officers. They're basically out there ground zero in the grocery stores. Everybody was going to them. So yeah. I agree with you. It's a nice way to give back to them.
I was at the grocery store the other day, and I asked the clerk that I see quite regularly when I go there, and I said, how you doing through all this mess? And he said he was tired of looking through plexiglass. So I guess I understand that. But
yeah.
So we kind of touched on this a little bit where things are getting back to normal, but are we still looking at being able to do roughly a 30-day close, or has that been pushed out a little bit more for someone that's starting right now?
No, we've never, honestly, that really comes up to the bank or the lender is the fair question on that. We've never really had a slowdown, at least on our purchase market. We still strive to have people ready to close in roughly 15 days, give or take, a little bit either way, but as a goal. And that's for your FHA and conventional loans. The VA loans can take anywhere from 15 to 25 days or so. And the difference on those days is strictly because of the appraisal.
Right.
USDA can take anywhere from 3 to 5 weeks. And again, it's just because it has another step with going through USDA. But USDA's turn times here on the last month or so have been very, very fast, within a day or two, maybe 3 days. So technically you could close a USDA loan in 18 to 20, 25 days, somewhere in there as well. Obviously, a big part of that's going to be the customer, getting us documents in a timely manner, and not pushing back for things, them having the ability to access the documents that are needed in a timely manner as well. But assuming they have access to them and are very compliant with getting the stuff quickly, our system is, we're set up to have people ready to close and in closing in roughly 15 days, give or take a couple days either way. So the 30-day close, at least from our standpoint, we never started pushing that way. We didn't have a big fall off with servicing outside of the refinance market, but a lot of those would get pushed to the side. For lack of a better word, they would get pushed back anyway, not to the side, because people already own their houses. So the main point was to try to get people on the purchase market through underwriting and into their homes. So, maybe a refinance may take 20 to 40 days, but the priority was to, get the purchase market still going steady and not dropping off with timeframes.
Sure. Well, that brings me to my last question today, and that is, I tell people all the time, and I know that a lot of the other agents in our office do, and I'm sure there's other agents out there, and I'm sure that you say this to them, but when you go to look for a house, I always say that the first thing you need to do is go mortgage hunting before you go house shopping. And so that means that you basically need to speak to a lender before you go looking for houses. And that basically is for knowing what you're qualified for. It doesn't mean what you have to spend, but know that you're qualified for it, and getting, because that's the biggest part of a transaction is getting all your paperwork together and all your ducks in a row. So if you could elaborate a little bit on that and what that means to you from your standpoint.
Yeah, great question, Todd. And it's a question that's been out there for, years, and probably will be for years to come. But obviously, the smart thing to do all the way around is to find out, number one, can you buy, and number two, at what amount, before you go out there and start getting emotionally involved into the shopping and buying process with, the housing market. There's, so many factors, honestly, that go into that. The last thing a customer wants to do to themselves emotionally is to go out there and shop before they know they can buy. And, worst case scenario, they do that and they can't buy, right? But for the ones that are going to get hurt worse than that, are the ones that are going to go out there and they start shopping at a price point that they find out later aren't going to get qualified for. And now they're emotionally attached to that price range and those types of properties and neighborhoods. And now if it's, if they end up getting approved, but at a lower loan amount, they've got to reshop. They already have that taste of that, that upper price point in their mouth and in their mindset. And had they shopped correctly to begin with, they may have loved that price point where they could buy at. It's hard to down shop yourself. And so that's, for what I tell the customers, first and foremost, for directly for them, don't do that to yourself. Number one, let's make sure you can buy, so you don't waste your time out there just shopping for something you can't get. And number two, let's make sure you're, shopping in the price point that you're going to be able to, one, afford, and then two, be comfortable with. There's a lot of people also that they may be able to qualify for that price range, and then they see the payment and they're like, I'm not paying that, so same mindset. Just because you qualify for it doesn't mean you're going to be comfortable with it. So, to that point, it's hugely important to do that. I always tell people, I say, buying a house is one of the biggest things you're going to do as far as the money thing goes in your life. And nobody goes to the gas station and drives around town looking at different gas stations to find the best gas or the, nicest place, and then pull in and not even know if they have money to buy gas. Like when someone goes to get gas, they're like, hey, I've got $10. I'm going to go find some gas station and put gas in it, So why would you do that with a house? That same mindset is, let's make sure you know what you're doing before you go do it, for peace of mind. Now, with that, it also affects you, the realtors, the buyer's agents, the listing agents, and the seller. Because obviously the buyer's agents, you're out there spending a lot of time with these customers. You're, taking them around, you're doing your research to find the houses, the neighborhoods, the things that they're going to like. And obviously time is money. And the last thing somebody wants to do is go out there and spend 1, 2, 3 days with a customer, or even weeks for that matter, with a customer that either can't buy, or you're in the total wrong, price range. And now you have to go and redo all that and reshop them. And, that's, a huge part of what I try to tell people is, take in consideration not only yourself, but the agents and the seller for that matter. Mm-hmm. You're taking the seller's house off the market potentially. And if you get, 5 days, 10 days, 15 days in the process and find out you can't buy it, that seller just lost time on the market, which isn't fair to them either. And then lastly is because of the market that we're in. We are seeing that there's a lot of multiple offers coming in on situations. We're hearing obviously that there's inventory shortage, which tells you that there's a line of people up ready to jump on houses when they do pop up. And so if you come in and you don't have a pre-qualification letter, a lot of things could happen. Number one, by the time you go get pre-qualified and get back, that property could no longer be around. That seller may not be interested in entertaining you because they've had other people that were ready. And you weren't, so there's a lot of things that, along with just not wasting your time, that it makes sense to come in ready to go. So when a property comes up, or if you see a property that you like, you can have a pre-qualification letter out within minutes. And you're not trying to track down a lender, work through that whole process. Granted, it takes 15, 20 minutes to do, but you still have to get a hold of a lender that's going to give you the time that can do that at your, time constraints that you may or may not have with getting that offer in for that property.
Right. I always tell people you can love, or you can like a house a lot, but don't fall in love with it until I hand you the keys.
That's right. That's right.
So, yeah. Well, Ryan, thank you for joining us today. I greatly appreciate it, my friend. And if you guys are in the need for a mortgage, reach out to Ryan, and I'll put all the information to contact him down in the comments below. And if you are interested in being on our show at Myrtle Beach Living, please send me an email at todd@toddcartner.com. And until next week, you guys be careful. Have a good one. Bye-bye.